That's it, done. Move that over there. Yeah, so I was speaking with Chris, and I was saying as part of what I was going to do, because we've just been hammering out content, and we've just been speaking to people all hours of the day and night, and Chris has been doing that as well. And people have been contributing with their charts and analysis, and there's been a lot going on, a lot of good stuff, which is really good to see. But we need to be aware of just how much we can do, and we need to be time conscious as well. Time is precious, and I think sometimes if you're doing too much, it's the whole thing about quantity instead of quality. So what platform is this? No, this is some pro real time charts and just my own configured software. Just my own stuff really. It's very colourful. So yeah, with regard to this trade, this is in line with a 764 strategy that I have. So I have 3 strategies, and they're the ones I'm going to focus on and talk about. And I put a disclaimer out there, and I want to make this clear as well, that what tends to happen, especially on when you're on like YouTube or Instagram, you follow people and you follow them blindly almost, to a point where people get so confident about what you're doing, they'll end up maybe risking half their house, so to speak, putting far too much risk. And the one time or the few times that it doesn't play out and it doesn't work, you end up losing a lot. And then you see people send you messages that'll be like, oh, you're a scammer and this, that and the other. It's fair enough. So I just wanted to make it clear that, as a reminder, you need to do your own due diligence. You need to journalise your own trades. You need to consider keeping a more detailed account for each time you take a particular trade or a particular strategy. You could maybe have 2 columns, one where you've taken the trade, and then you can note down the outcome, whether it's a winner or a loser, and put comments as to what happened. You can have another section where maybe you had a setup with a strategy that you're using, but for whatever reason you didn't take it, whether you missed it, you weren't around, or you just chose not to take it. Again, it's good to collect the data. That's something that I'm very lazy at doing. I can say, oh, this is working and it works well enough, but that's not enough to say, I haven't got the data. If someone says to me, well, how many times has it worked in the last month, for example, and how many winners and losers? I could do it if I sat down and took the time to put the information together, but for the moment I'm I'm not doing it. And so I think maybe over this year, for example, I will focus on collating a more, keeping more of a detailed record. And I think it's a good time to do it because it's the start of a year. So you can follow me along with this journey. But of course, you need to be conscious of what you're doing and do some real backtesting for yourself. Because the more backtesting you do, it goes without saying, it will build your confidence. And always stick to risk management. 0.5%, 1%. Don't start doing all these kamikaze risks. So I have to say that because it's responsible. I was speaking to a colleague of mine, and I have been speaking to him quite a bit over the last few weeks, maybe, because I'm sharing my journey and talking to him about what I'm doing. And initially it would be like, why are you wasting your time? Why are you wasting your time doing all that? Why are you putting stuff out there for people? And it's just, it can be a waste of time in so many ways. Just focus on yourself. Just do your own thing. So we've had these conversations, and also and so also there's the aspect of being clear on what it is I'm putting out there, and being more responsible with what I share and what I put out there, because if you're a bit blasé about some of it, it can be misleading, and selling false dreams and all the rest of it. So do your due diligence. That's why I call people those marketers on Insta scammers. Just be wise to it. I mean, I've been through a few courses. I spent a couple of days going through a few courses that were out there available, just to see what's if there's anything that really stands out. And you might get little nuggets of information, but generally they're all the same. And generally there really isn't any statistics to reinforce their strategies or their courses to say, okay, if you do it like this, you're almost guaranteed a 70% win rate or stuff like that. I'm sure that people can make these strategies work. I'm sure that you might have mixed success with it. It just depends. There's so many variables to consider. So I think as a responsible trader, I think whatever I put out there in terms of content and sharing, you need to understand that it's not the gospel. It's not the Holy Grail. I don't have any official records for how many winning trades, losing trades, etc. My results are a bit sketchy, to be perfectly clear. And so, yeah, you need to be wise to that and understand that that is how the industry is as well. So, I'm no different. I'm no different to anyone else out there in that respect. So, yeah, just be mindful of that. Okay, because I'm not a qualified mentor or coach, and all opinions are my own at the end of the day. But what I will try and do is I will try and focus, instead of spreading myself so thinly, focus on my strategies and do analysis, and hopefully you might gain a few nuggets of information that may be helpful. So let's go straight into gold. And last night we had that move down, and the first target to the downside, which I did share, was to 1810. That was the area. Now it did spike lower. It went closer down to, I think, 1802. But what you need to recognise with the 764 strategy is people have asked, well, where do you get in? So let's drill down to like a 15-minute chart. Where do you get in? Okay, well, you don't have to be aggressive in buying it back up. And where do you put your stop? And people say, well, where do you put your stop? So I did a quick video analysis earlier, but just to recap, and if you want to ask me any questions about it, then now's the time, really. So, let's change this to a 15. Why is it not changing? Oh, here we go. Get over here. It's a bit lagging, I think, because we've got a lot of things running. George, you're quite funny. I don't know, mate. Just have to be mindful, don't you, about all of that. What people share. Some of these guys. I think I was talking to somebody today. I was talking to Chris as well. I was talking to other people, other traders. On Instagram, there are traders. They are making money through whatever means, whether it's trading or endorsements. They're making money, and some of them are young. They're 23 years old, and they've got a fleet of high performance cars. Well done. I'm happy for them in every way. So if they're young, and I said, look, if I'm being realistic and being honest, if I was that age and I had that much success that early on, probably do the same, wouldn't you? What does a 23-year-old want to spend their money on? They've probably got some small little house, but they've got a fleet of cars worth more than the house. So it's understandable, isn't it? So take it all with a pinch of salt. So anyway, look, this is actually, you know what? I'm going to do it on here to get to the point and put it on the trading view chart because you can see it much better. Here we go. Click on that. Beautiful, beautiful movement. There you go. The 76.4 around 1810. So we stabbed down, and then a lot of traders were trying to get in short on the retest, which is understandable, isn't it? People are going to take it down. But like I was saying to my colleague I was speaking last night, I just sort of hinted at the fact that 1810 is a 764. And so see what it does there, and sure enough you saw it react, and come midnight London time it reacted and bounced perfectly. So as a 764 strategy goes, that's your entry, which is perfect. It couldn't have been any clearer. Perfect entry if you were around trading. So if you're in Asia, Australia, etc., it would have been morning, maybe may have been afternoon in America. You might have been on this trading it. I know people were trading gold. entries there. Where's your stop loss? Well, your stop loss would initially have to be about 80 or so pips below the last swing low. In this case, because we had this nasty spike down, quite a nice bit of momentum, you've got to put your stop below. Consider 1800 as well, because it might go down and test that area. But you wouldn't just jump in blindly. You'd have to wait for some confirmation. So wait for it to stop bouncing off here, and you think, okay, it's bouncing off. I'm gonna enter this trade. 764 strategy. You need a few more confluences, but your risk to reward needs to be a 1-to-1 at least. So if you're putting an 80 pip stop loss, you need to be looking for an 80 pip move. It did give you that, a nice little punch up. Ideally, in terms of structure, in terms of what to do next, well, you're looking at, if you're in around this area, you want to move your stop to break even and tuck it in behind this price action, because you can clearly see that that is an area where you have the support. This is a 764 strategy, so you're buying off the 76.4, and you can take some profit on the first impulsive move up, which again makes sense. Now in terms of a T2, you'd look for the next line of resistance or some clear resistance, which might be previous structure in terms of a T2. But once you've moved your stop to break even, it's a risk-free trade, and you'd be looking to take some profit, ideally at a 1-to-1, so about 80 pips profit. And if you're risking 1%, you're going to probably bank, I don't know, 1% maybe, or you could take off partial profits. How you manage that part of the trade is entirely up to you, because I know traders, some like to just let things run and then take all profit in one go, or some like to take some partial profits. There is no right or wrong way to that. I couldn't advise, so it's whatever you see fit. So that's where the back testing comes into it, and you have to have a little play around with it. Okay, so that's down to you. Can give you sort of guidance, etc. But this is why having a clear get in here, exit here, and take profit here can sometimes be a little bit too mechanical. We do need it to be mechanical to a certain degree, but you do need to allow a little bit of wiggle room, a little bit of flexibility. Allow yourself a bit of flex, because you might decide that you want to take some profit early, or price action's not doing what you thought it was going to do, whatever. So hopefully that one makes sense, and yeah, hopefully that's good. Yeah, someone says that was me. Yeah, Big Sam. Yeah, hopefully you found that useful and helpful. Go over the notes, go over the strategy again, go over the analysis that I posted on this setup. Any questions on that? If not, I'll move on to routine, how important it is to have the daily routine. Yeah? Yeah? Yeah, I mean it's got potential. Today's a bit of a funny day. We can see it spike up. We might see it spike up. I'll take it all with a pinch of salt today, because it's a holiday in America, and we tend to see some good moves on gold on a Monday. At the start of a holiday, at the start of the US session, they tend to move stuff. Well, this is what I mean by today. You got to factor in. There's always variables. In this case, it's a bank holiday. It's a holiday in America, so I'm not too fussed. If we got in down here and you made some money buying this from the lows, great. But if you're trying to get in up here, it's not a bit of me at all. I'm not fussed about this. It doesn't excite me at the moment. I think what I said last week about gold remains still the case. Again, if you watch the video I posted about the analysis, we had trouble breaking above 1860, didn't we? And then it curled over, and it just tested that support. So 1863 to be precise. I put alerts at 1862, and just to see if it would, so I didn't have to sit watching it. So it would alert me on my phone. Most brokers give you a facility to set an alert at a certain price, a certain level. So I utilised that, and that's what I did. And you saw it just failed, struggled. There were so many traders trying to take longs, trying to call the bottom on gold, get in. I was like, I was like, well, why are they doing that? Just wait. Basic straightforward bit of trading advice, I guess, is it's bearish when it's bearish, it's bullish when it's bullish. Keep it simple in that regard. There's nothing more to it. If something's bearish, don't try and call the bottom of it. Someone said as well, it's like trying to catch a falling knife. Like, what's the point? What's that? Is that ego? What is that? Well, you want to catch the perfect sniper entry so you can brag about it? I mean, be clear what you're doing and why you're doing it. Sit in your hands. Be more patient. And so sometimes there just needs to be a little bit more self-control. And so you can see here, we were sitting on a 200 EMA on the daily. 200 EMA, but you could see it just wasn't going up, and it was just really heavily seeping down. It's like trying to hold water in your hands. It's just seeping through, and it's just that kind of price action which was telling you that downside's still not done. We look like we're trying to break. It's trying to break. Can you see that? It's like quicksand. It's just trying to break. And sure enough, it did. Within sort of half an hour of opening last night, we saw it push down. It spiked down, and it retraced 76.4% of this move. That is now completed. Now we've punched higher, and we're looking at potentially seeing bullish price action to the upside. I'd like to see a bullish candle on the daily, and so maybe tomorrow explore the possibility overnight during the Asian session into tomorrow, the possibility of seeing some bullish price action. I think we may have to wait until tomorrow afternoon London time for the US traders to finally come back from their holidays to see some real proper volume, and then take it from there. You know, that's my thinking with all of this at the minute. So I'm not in any particular rush to go gung ho on a Monday, but you know, depending on your entry, if you manage to get a decent entry in, you know, well done, nice work. As for me, I'm sweet, just waiting, and yeah, we'll see what happens. Hopefully that answers that question. Yeah, patience, 80% of the time, patience, 10% long, 10% short, that's about 20% trading. The rest of the time, observe, see if you've got some strategies that fit your criteria, trade setting up that fit with your criteria. You shouldn't go too far wrong. You know what you're doing right and wrong, so very important that you're clear on that. Hopefully that's been helpful. I think a daily routine's good as well. It's important to have a daily routine. What do you think? So I did a video on a daily routine because they asked about my schedule, just to go into it in a little bit more detail. So I've done that. You'll notice that outside of trading, physically taking trades, and maybe even to a certain degree when you are in a trade or taking a trade, a lot of it is common sense. A lot of it is about just looking at what you're doing and thinking, is this right? Does this feel right? Should I be risking more than 0.5%? Am I being a bit naughty here? It's very difficult to be, you know, self-critical and to govern yourself. When you're in a job working for someone, you've got rules to follow. Stick to the rules or you get fired. That sort of, you know, that's easy. We're like sheep in that respect. Try and governing yourself and being disciplined with yourself. That requires personal development. That requires a little bit of self-control and a bit of willpower. That has nothing to do with trading as such. That's to do with yourself, isn't it? That's why we keep saying 80% needs to be about you finding ways to improve yourself, and what you'll find is you'll have a more fruitful life as well, because some of what you do will spill over into your daily life, and you'll probably feel more empowered on a personal level. You know, it's quite good. So self-assessment is difficult, but that's why you put in rules and have a routine and discipline. So I've shared with you today a video on my daily routine, and I've gone into detail breaking down. It's a 10-minute video, and it's standard, and you'll think, okay, there's nothing exciting about it, but sometimes you just need a little bit of a nudge, because otherwise you're sat there in the dark almost. You're sat there hiding behind your screens, and you're not really seeing the results that you want. And I know a lot of people are um, they have these pots of money, whether it's their own money or whether they've made past certain challenges, got prop firm money, and they're at they're at a point now where it's like, right, I've got this money, but I can't seem to monetize it, and that's just, there's something there. There's this blockage in your mind that needs addressing, that needs sorting out, and this is where the self-development comes into it. So take your time, and you'll get there. You'll get there, and you'll be like, wow, amazing. It might take you several years to get there, but take your time and see. Hopefully you'll get there a bit sooner. But yeah, just I can help with that, can give guidance and things like that. I'm quite happy to do that. So yeah, that's where we're going to be going with in terms of what we focus on this year. Hopefully you found that very beneficial, and hopefully you understand what I'm talking about. And yeah, any questions? Final questions? Excellent.
Nice. Just really quick, that's something that I'm glad that you brought it up because I somewhat said it in my little presentation or whatever, but that's kind of like the direction we're trying to take things, right? Like Alex and I have been talking, and we're just gonna really try to put some things together where, if people are still trying to figure things out, then you can take a look at, a section very straightforward, because Alex has been gracious enough to share with us, his daily routine, his strategies. We're gonna look at a couple more things in depth, but eventually, hopefully much sooner than later, the goal is to have everybody trading the same way on the stream. For the most part, right? Like I'm gonna be trading the same way as Alex. He's obviously gonna be trading the same way as Alex, but everybody's sort of coming together so we can be successful together. You know what I mean?
Create a little section as well there so we can share if there's a trade being taken that's following a strategy.
Yeah.
We highlight that and saying we've taken this strategy and this is what we're doing. That way you can then see for yourself firsthand whether that strategy is for you, whether it's working, whether it, just firsthand, because this is what I had trouble with this. I'm seeing so much information out there, and so much is just being regurgitated and thrown into like these forums and discords, and it's the same stuff that's out there. And basically what you're doing without realizing, all you're doing is endorsing some marketer, some trader, so-called expert trader out there on Instagram. All you do is you're endorsing their product, their course. But it's like, well, have you tested it? Have you got any results, tangible results to say it works? And it might work for someone, but not for anyone else. So there's variables to consider. So I said, well, you don't want to just become a toxic place, thinking that you're doing really good by sharing all this wonderful information, but then you think, actually, is this information that we're sharing, is it really truly wonderful? Because if it was, then why is it still the case that stats speak a lot? It's all about the stats and the facts. The fact remains that 99% of retail traders are losing, and there might be the 1% that are able to do what they need to do because of certain factors that, you've either got it or you haven't, kind of thing. It's like that. So, so it's like when all is said and done, we just want to polish up what's being shared and give more evidence and results to back up what's being shared, so you can then look at the data yourself and say, yeah, this works, or it doesn't work that well, or it doesn't work for me because I have trouble executing a trade, or whatever it is, and that hopefully will help you improve, and so you're not just following blindly. I hope that helps. Someone's just asked a question: where do you draw your fibs? Well, from the high to the low, simple as. You take into account the wick as well. Don't exclude the wick. It's not the body, it's the low to the high. The low to the high means just that, the low to the high. Simple as, really. Now sometimes from broker to broker, chart to chart, the high might be slightly different, especially if there was, like on gold, if there was a wick down, in this case down here. I've seen one broker, their low is only registering it as being 1805, something like that, which is quite strange, because last night when I looked, I saw it go down to about 1802, No, I've shut the charts down, saved it all, come back in the next day, and that low has changed. That low is at 1805. And I'm like, well, I know for a fact it went to 1802. So it's very handy and very good as well to have multiple charts and look at things from a multiple point of view. Don't just rely on one chart, one evidence, so to speak. Don't just think that is it. Compare. Compare charts from multiple feeds, because you can appreciate that these feeds are being given to you, provided by the banks. The banks provide the brokers with the fee, with the feeds, and so that information may differ slightly. So get an idea of what's what with in regards to that. People ask about how brokers know so much. It's not the brokers know so much. It's the banks that are providing it. They can see where orders are. They can see where the volume is. They can't see you and your name. They don't know you personally, but they can see where money is flowing, because obviously they're providing you the feed. So it gives them certain access, doesn't it? It's all one big manipulated game. Remember that nav trader in West London who was just doing some massive volume trading. He was just very good at executing trades, and he put orders on, then he'd pull the orders, so he got into trouble for that. But he was giving the banks a taste of their own medicine, and they didn't like that at all. That's worth reading. Go back, look at I think it's 2010, something like that. Look at this guy trading out of his bedroom in his house, and it wasn't about the money. But if the banks do it, which they do this all the time, no drama, great. The banks will get bailed out if they mess up, no problem. Taxpayers' money, happy days, we bail them out. If you do it, you'll lose your house, you'll go to jail, they'll take everything from you, they'll demonise you, you'll be, you're cursed, bewitched. It's disgusting how some things can just turn into being so nasty. If media get involved, then they'll taint you. You'll be scarred for life. You'll be demonized, and it sells papers as well. And it's just, people can be quite spiteful and quite disgusting in that respect. And so I think that's why it's important to have to acknowledge that privacy in this day and age is more important than ever, and trying to remain private and discreet is important for those reasons, because some cultures, some countries, if you're successful, people want to knock you off your pedestal, don't they? People can be naturally envious, and jealousy is a thing. It's a real thing. Sometimes people can't help themselves, and maybe they've just got to look at themselves and they've got their own issues. So there's all of that to consider. So, and when it comes to money, people are funny when it comes to money. Some people obsess about money. They would kill for money, So it's just quite shocking, really. So you have to be careful. We're in the financial industry now, and so you're playing with people that are like that. They don't give a shit. They have no ethics. They don't care if you lose money. They don't care if you go bankrupt. They don't care. They'll get paid their bonuses this month into next month. They'll get paid all their annual bonuses for last year's fiasco, all that volume that was moving down and up in the markets. They'll get paid a shit ton. Some people lost some money, but some people, I guarantee, made a killing on that movement down and up with COVID. So again, understand the business that you're in. It's like joining a triad or the mafia or something. Once you buy into this, it's very hard to sort of step away from it, and it's a job for life, in that respect. So again, be mindful of that and be aware that this could either make you successful or ruin you, and there's no real middle ground. It's one or the other. So this is what we want to highlight and work on, and just want to try and help people as best as. And so if my door's always open. If you want to talk to me, send me a message, and I'll try my best to help you or answer the questions that you may have. Okay, 7 minutes left. Any more questions? The world's billionaires all got richer. Oh yeah, of course they did. Let's have a look. No, you can see here, it's a prime example. Look at my chart. So the record high on gold is at 2075. That's my zero line. Sorry, that's my 100% line up here. My 100% line. My 0 line for that is 1764. So I'm watching a retracement up, which was to the 61.8 previous structure, 1956 area, went up there, double top, fell over, didn't it? Bosh. And there. So 61.8 retracement from the low, retracing up. It's called Fibonacci retracement. The clue's in the title of the tool. Retracement. We're always just looking for retracements. So I had it going that way for the retracement. And then when it stopped and sold off, I've plotted some fresh fibs. I've kept those ones on because that's still looking at the bigger picture. I'm still interested in higher highs, maybe going up to 2000, because I've got my 764 there at the moment. Unless, of course, my low gets taken out down here. So I'm interested in maybe some buying coming in now and another U-turn and a V-pivot on gold now that it's pulled back 76.4. And I think 764 down here, 1810, is a buy opportunity potentially to 2000, which is 900. It's only, what? It's only 900 pips. No, more. 1,900 pips. Is that right? Yeah, about 1,900 pips. That's a nice institutional move. Pump some money here, take some off here. That's the sort of stuff that'll do. Position trading. Take some positions down here, pump the money up. But we needed to see it clear out to the bottom. I'm just going to wait more patiently and see for sure. I'd like it to break 1860s for some potential bullish buys. But you can see, going back to the fibs, I've plotted the fibs to the downside, haven't I? Because I'm monitoring this move down. I wanted to look at this move. This isn't going to tell me anything about this move. So I want to drill down to this move, or I want to highlight this move, and I want to stalk it, track it, monitor it. Yeah. So I've got fibs going up, I've got fibs going down. It's not stagnant. It's not just one set of fibs does all. It's not generic like that. Okay. Yeah. Hopefully that helps. Somebody asked me that earlier as well, and they got it straight away. They had fibs going down, but then they put some fibs to the upside because they're monitoring the retracement up. So what I'll do as an exercise here, could maybe go down onto like, let's have a look, a 1 hour or 4 hour? Let's have a look, maybe a 4 hour. This current move up, what I'm going to do here, or what I'd like to do, what I will do, I was going to do that today, and so I'm doing it now live, is I want to monitor this move now that we're currently in. So I'm going to take my fibs again. I'm going to take the starting point is 1959, that last swing high. Now that we've done a nice wash and rinse to the downside, nice little stab down, order grabbing, stop hunting, whatever you want to call it, liquidity grab down here. Nice 1802, plotting some fibs. And we can monitor now the upside move, which is looking at 1862. There you go. I'm looking at 38.2 of this range would be back to previous structure, where I said it needs to break. So if it does go there, which I think that's what we're looking for based on this current price action, gone up, pulled back, looking bullish, unless we get some sharp movement to the downside. Sorry, my kids just come in. Right. Yep. So yeah, unless it does any sharp little disgusting little, days like holidays, you might be prone to a bit of a disgusting spike down to stop people out trying to go long. You never know, because volume's low, volume's thinner. Which means what? Which means the banks don't need to pump so much money in to make a move happen. Simple as. Instead of them pumping in 100 million to go to make gold sell off, for example, they might only need to pump in 20 million. Like I say, they can see the volume, they can see what's going on, they can see who's trading, how active it is. They can then decide, actually, if we want to move this price down, how much do we need to put on? How much, how many orders? What's down here? That's how they play the game. How much do they need to risk in order to make this move in the direction that they want? That should make sense to you. Always understand that. The banks control the game. It's like the casino. House always wins.
Can you say that last part one more time? How
So,
you said, banks are looking for
oh
the
yeah.
retail person has to go in and stuff?
Yeah, of course, yes. Well, okay, so Because the banks provide the feeds to the brokers in terms of what we're looking at now on TradingView, this has been provided by maybe Deutsche Bank, because I know they tend to do a lot of providing. You need to ask your broker who you're with and ask them, who do you get your feeds from? They'll probably tell you that they've got 6 or 7 feeds coming from various banks, and so it can switch and change and alternate throughout the day without you really knowing who the feed is coming from. And that's how it works. So also it's worth understanding then that if the banks are the ones providing the feeds, the banks are the ones that are controlling the game. So for a trader in the bank to say, right, I want to buy here, I want to sell here, all they've got to do is look at where the volume is, and on days like today, where it's a holiday, volume is going to be a little bit lighter, a little bit thinner. So they might not need to move this a great deal. They don't need to risk too much to make this market move. They can put a little bit of money in, they can move this any way they want. If they want to stop you out, that's why sometimes you see these sharp spikes at certain times, and you think, well, what caused that? It's like, well, they just saw there was some money there to be had, and they just went for it and grabbed it. That's the manipulation we talk about. There's less than a minute to go, but hopefully that makes sense. So if they want to push this up, but yeah, so, you know, triple top, want to see it go up at the end of the day. It might stab down one more time, might present a buying opportunity though. We'll see what sort of move down we get. If it can break this current 1840, then we'll look for 1860. 200 pips. So if it breaks 1840s and starts going up, we'll look for 1860s. If it stays here, we'll go short. Hopefully you found that useful, and hopefully it's given you a bit of an insight. Alright guys, would you recommend trading a strategy that forms throughout the day often, so you can take more trades in a day and therefore having the opportunities to make more profit? Well, if a strategy gives you lots and lots of setups throughout the day, great, but I find strategies don't give you setups every day, all day. You know, you might get one setup and you take it or you miss it. So yeah, that's where you've got to be thinking. If you've got, tell me, unless you have a strategy that you've seen set up every 5 minutes, you know, allowing you lots of opportunities to take the trades, great. I'm all for that. But if it's not, then yeah, you'll probably find that a strategy might give you 1 or 2 setups a day, or even 1 or 2 setups a week. Just depends. Rat the Chunk. That's such a good username. Hopefully you found that answer makes sense. Thanks very much, guys. Have a good day. I'll upload this live stream